Let's talk about Meta and their Q1 earnings, because I think there's a lot to unpack. Some of the things that Zuck said, some of the things in the numbers. Xander, did you follow Meta's earnings?
I have only skimmed them thus far. They came out yesterday, so don't get mad at me.
Oh, I get to be the earnings guy this week. Usually I'm just listening and you're the earnings guy. So Meta, I thought, was very interesting. I didn't listen to the full investor call, but I've been reading up and following some of the data that they shared. So just a quick poll quote from Reuters. Well, I mean, not to bury the lead, the stock cratered about 15%, give or take, immediately on the comments from Zuckerberg in the earnings call, which is wild because they beat on almost every metric versus what the street was expecting.
Right.
So, if they beat on all the financial metrics, and actually let's just call out a few of those. So they had revenue at $36.4 billion, up 27% year over year. Operating margin was up 38%. Earnings per share up 114%.
Ridiculous.
Daily active users up 7%, which is kind of surprising. A lot of people don't think of Meta in a growth phase for users. Ad impressions increased by 20%. Average ad price increased by 6%. Remember those numbers. We're going to come back to this. And then cost and expenses only up 6% and headcount down 10%. Okay, so these are all numbers that Wall Street likes. Why did the stock crash? So here's a poll quote from Reuters that I think addresses that. Meta CEO Mark Zuckerberg said on post-earnings call that costs would grow meaningfully over the coming years before the company makes much revenue from its AI products. That stoked investor fears as Zuckerberg was plunging Meta into another costly endeavor at a time when its augmented and virtual reality business was losing billions of dollars each quarter. Investors were caught off guard by higher capital expenditure, exacerbated by slightly softer second quarter revenue guidance. As such, shares entered the penalty box, according to an analyst at Baird Equity Research. So I guess there's two things here. Zuck is saying, hey, we're going to be investing heavily in AI and is not going to make money for a while. And investors have PTSD because of the metaverse and Zuck's explorations in the metaverse and the billions that Meta has lost from that. So I think it's the 1-2 effect of them actually saying, we're investing in a thing that's not going to make money for a while. And Wall Street doesn't like to look forward more than 1 or 2 quarters, mixed with like, oh, we know what happens when you do this thing. You're doing the metaverse thing again. That's my take on why the stock is plummeting. Xander, do you have any comments on that? I want to go into like what this means for advertisers, some of these numbers, but first let's just talk about, from a business standpoint.
Yeah. Well, so I think Mark Zuckerberg in hindsight is going to be like looked upon as one of the most obscenely strategic and like powerful business titans of like all human history. I mean, the foresight of this guy is incredible. And you could talk about, the metaverse and how he mistimed that and he spent a lot of money. There's a compelling argument there. The metaverse in some form is going to happen. So he might have just been 10 years early. That being said, they also spin off so much freaking cash that they need to invest it. Otherwise, the government is going to come eat their lunch. And so I think part of it is them just like hiding their money, right? Like they need to be investing in something, might as well build proprietary hardware. So, all right, the other side of this. Are you telling me that we shouldn't be building in AI? Like that is that the thing that they're saying? Is basically like you shouldn't be investing in the most innovative technology that is going to be the ultimate system for cost reduction in the next couple of decades? It just doesn't make sense to me.
Well, one thing I've noticed is in Wall Street, companies are put in boxes, right?
Yeah.
And NVIDIA is in the AI box now officially and treated as a pure AI stock. When we see companies like Tesla and Meta talking about expending investment into AI, they're looked through from the lens of like, well, you're an ads business or you're a car company. Like, why are you doing something that's not going to drive revenue from your core business? So I think we're just at this puberty period for AI where it's like eventually every company is going to be an AI company in some capacity. But if you're not in that box and you're investing in it, you're being punished in the stock market in some cases.
I think it's just something really important. Every company is going to be an AI company. So strategically, what does that mean? There's going to be a few people who capture the AI market. That's generally how consolidation happens in capitalism. Right. Consolidation happens over 10, 15, 20-year period. We saw that happen on the mobile side, right? We have two companies, Apple and Google, who emerge as the dominant players in mobile. Okay, so if you just got wrecked on mobile as Facebook and Meta, you are super, super allergic to having somebody else get ahead of you and become a consolidated winner in the sector. Mm-hmm. And so obviously they want to invest ahead of this and become one of the dominant players so that they can control their own destiny. I mean, it's like, I understand the short term, we're spending money. People are scared. Zuckerberg, he's a king. He owns a majority of the voting stock because of his supermajority control. No one can stop him. That being said, this is obviously the right strategic decision.
Yeah, well put, Xander. I'd like to pivot a little bit here. I want to kind of go back to the numbers. So again, we try to have some actionables for people working in games growth or growth marketing in general. So I took one look at these numbers and I took a look at what's going on in our UA portfolio and what some of my colleagues are talking about. And I was like, oh, Meta is saying the quiet part out loud. This is what's going on. Yeah, maybe this is our TikTok clip for what's going on with Meta's numbers and how it affects advertisers. So I'm going to go back and refer to some of the numbers from Meta. Hear me out. All right. Daily active users increased 7%. Ad impressions increased 20%. What doesn't match up there? Okay, they're showing more ads to every user. Okay, that's a net negative for advertisers. You're saturating the market more. Average ad price increased 6%. So you're paying more for every single ad impression while they're oversaturating the market 20% more with that. What do we see on the other ad side of this for media buyers, anyone doing performance marketing? Hey, why is our Facebook performance looking so much worse lately? It's because you are paying more for a worse product. So Facebook is spamming users with more ads, charging more for every impression. And if everything else remained the same, that's going to have a net negative impact on any performance marketing. Meta would probably argue like, oh, our algorithms are getting better and that's why the value is going up. But that is not reflected. If you go on like the Reddit forums for Facebook buyers, everyone is seeing similar results. And so that's just facts. That's just based on what Meta has shared and some anecdotal evidence, obviously, what Upptic is seeing across our portfolio of channels, where we see Facebook dropping off at a faster rate of performance, where everything else is normal or improving, right? Now I'm going to put on my tinfoil hat for this. I think based on the trends we've seen in the trenches doing user acquisition, we're seeing an average of something that has been acted on more aggressively in recent weeks or months. So to put another way, say that you've gotten, let's just average it out to, I'm just going to say 25% penalty on the performance of your ads. I think it's actually much worse than that. I think that they made some big changes getting near the end of maybe partway through as they saw the writing on the wall for this quarter and said, hey, we're going to crank up, what we're making. Facebook media buying is very obfuscated. Like you don't do a fixed price per impression or anything like that. You set these vague targets and then trust the algorithm. So I think these have notched up to be more aggressive in Facebook's favor. And we're going to probably see in next earnings report that these numbers get even more drastic because what we're seeing in the trenches, data is telling us what Facebook is sharing. Like, yeah, we're selling you a worse product on the ad side. I think how much worse it is actually much more exaggerated than what these numbers reflect. And that will be reflected in next earnings season.
Interesting. So I don't have the history of all of Facebook's earnings in front of me right now, but I've read a lot of these reports. And I think almost every time ad impressions go up and ads costs go up, there's some exceptions around ATT and how things were going during that period. But basically they do the same playbook and have done this for years. And so, I mean, they might argue, oh, we have Reels, it's a new product, we're learning how to integrate ads into it. I mean, that's probably, if you ask their guy, that's probably what they'd say. That being said, if we're seeing performance not working on the back end of it, at the end of the day, we're performance marketers. We only care about the things that is actually driving incremental performance. So
yeah, I mean, what Meta still somehow has is I talk to a lot of teams that they only advertise on some of the combination of the three of Meta, Google, and maybe Apple Search if they're mobile. There's this whole performance marketing ecosystem that call it 98% of businesses, it's not even on their radar. Right. So there's kind of this captive audience of advertisers that don't have this comparison of other marketing channels to look at and compare their Facebook performance to that we have here at Upptic because we're monitoring everything side by side and saying, okay, this is better ROI than that channel, move Meta's budget over to this. So yeah, just a tip. Back to the thing we touched on in the TikTok story, this is a season to start diversifying your marketing channels. Meta has a captive audience and they're punishing us a little bit more quarter over quarter. And we need to be reactive to that as advertisers.
Media buyers, yeah. I rest my case.
All right. What's up next?